The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Let's check out the markets and see where the market is at right now, what all's going on, and what we can take advantage of right now. But first things first, let's see where the market's at. We got the S&P is up 13.25. We have the Russell up 4. Nasdaq currently up 21 points with the Dow up 135 points on the day. So Dow screaming right there. We got copper right now. It is down 2%. We have gold is down $10. We got silver down 2% as well. Looking on over at our energy sector there, we got natural gas, which is down 3% on the day. Natural gas inventory day. And we got oil flat, but definitely not a flat oil day, but flat compared to settlement. It's had some nice, great moves. And let's see here. Let's check out, we got corn is down, 1 3/4%, down 8.5 points. Soybeans pretty flat on the day. And euro dollar is currently down 48 pips. We got Aussie dollar up 4. We have pound dollar down 23. Dollar franc is up 27. Dollar CAD is up 9. Dollar yen is up 10 pips. Aussie yen is up 1 pip. And euro yen is down 32 pips, pound yen is down 9 pips, and euro pound is down 12 pips. And it's been a good day. It's been an interesting day. The markets have been flowing really well. We had a couple news announcements, so we'll go into some of those as well. We'll talk about those. Nothing major, but I did want to go back and do a little recap on yesterday. And I want to talk about the FOMC and how those worked out. It was pretty sweet. I actually talked about it a little bit on Tommy's show yesterday, on Tommy O'Brien's show in the afternoon. I'll hop on. He allows me to come on and do a little guest speaking spot. And, we talk for about 15 minutes about the markets. And I'm getting some really good news from the traders, so it's really cool. They're being very blessed. It's awesome. That's why I'm so distracted. But anyway, so looking at the markets and looking at the FOMC, I wanted to walk through those steps and also, like I said, talk about today's news. So today we had the existing home sales, we had unemployment claims. Unemployment claims came in a little better than expected, not a big deal. Existing home sales came in a little worse than expected, not massively off. Natural gas storage came in quite a bit lower, about 10 billion, 10 British thermal units lower, and that combination, has made a decent little day. We also had bank stress test results. You need to be aware of this, that these are the final results of the bank stress test. So, I pulled this up. I look at Force Factor, investing.com, look at a lot of websites. But it's going to have, banks that passed, banks that fell, new capital requirements. If you're trading a bank stock, you better be very aware of that, okay, if they're on that list. And you go on, you can look at the releases and see when they come out and all the stress test results. All this stuff's going to come out, but it's coming out at 4 o'clock, okay? I don't know what all is going to be in the report. I don't know how good or bad it's going to be. And you need to be prepared for it. So be very careful those last 15 minutes of the day, okay? And I want to be able to help you out on that as well, because I don't want you to get stuck in a bad trade. So like I said, if you're in a bank stock, be very leery. Could be good, could be bad. Maybe more than others, whatever, you've dug in. But if you're just trading indices, it can definitely affect the last 15 minutes, depending upon what banks those indices are in and stuff like that. So that could even affect like indice trades, binary trades, stuff like that. So just be careful. Okay, but now let's go ahead. Let's go back. Let's check out the a few different things. Gold looks like it's about to wrap up here in about 20 minutes. Had a long gold trade that should be out of that one by now. But volume is just sort of backing off, tapering off right there here at the end of the day. But I wanted to go back, and I had a trader call in yesterday, asked about gold and impact on the Fed and all that fun stuff. You never know what's going to come out. There was some surprises in that announcement, and so we're going to go back. We're going to look at it and just make sure we have the right stuff up. So right over here, let's see. We had the release came out at 2 o'clock, and we didn't really get just we had a big volume spike, and we had a move. I mean, it could. Let me move some other stuff out of the way. It'll let you see the move a little better than sometimes when the charts get squished. But I mean, it was only about a 10-point move on gold. So, I mean, I guess it's a little more than 10, but it's about 10. So right before the news, like 2 o'clock right here. So if we go in, we closed right about 1340, moved down to about 1330, right into the, right into 3 o'clock. We got a little bit more of a move at the end of the day, and then it just went flat. But just a big Fed funds, release, even the press conference wasn't just a massive mover. It can be a massive mover. I'm sort of glad that it wasn't available because I'd have been tempted to trade it. So, and so looking at that right there, we avoided the trade. But the big trades I was looking at yesterday, I was looking at like Euro yen and pound yen and US yen and pound dollar. And so on those trades, we went in and we did the iron condors. And so I wanted to walk through those step by step with you, hopefully to help you pick those up a little bit better and master those. They're really becoming, I would almost say my favorite. It was straddles, but I'm getting more and more to where I like iron condors. Unless I just really have a big expected move, which we did have a big expected move. But even with the big move, a lot of times iron condors can still be better. And the trades that we went in that we did yesterday, and let me pull up, see if I can get all my order history because I got lots of trades in here. We're in the Euro yen right now, so I got to find that one in my history. And yesterday on the show, I covered these live on the show. But we did the 141.30 to 142.30, and the 141.30 to 140.30. And let's see here. This price, 141.30. And we were looking at the 2 to 3 o'clock expirations. Okay. Or actually, it was really 1 to 3. We were getting in. Let's see, what time do we get in these trades exactly? I can tell you the exact time. About 1:40 yesterday. Okay. So about 1:40, about right here. We're getting in the 1:43 to 141.30. So yeah, shrink this even more. There we go, right here. Okay, 140.30. It went so fast yesterday, that's why I want to cover this with you. 140.30 up to 141.30, right there. Okay? And that's the one we did the inverse. We bought. Okay, so we bought this one right here. And then we sold right here. And that gives us our sold strike. So we sold this one. Okay? And we went in and we bought the lower strike. We bought the 140.30 to 141.30. We bought it for 141.16. Okay, so we bought it right down here, 141.16. So we'll put that in there. And then we sold the upper one, 141.30 to 142.30. We sold it for a price of, let me get the exact sell price for you, 141.64. Okay, so right here, 141.64. And now let me zoom in on this a little bit more. We'll even expand this out some. And that peak is just annoying. So let's go with a red. Good old, there we go. That'll work. It's just that peak was just, I couldn't take it anymore. And I'm even going to look at a few things I want to point out to you on this trade that helped me out. Okay? So as we're doing the trade. I put the trade on. I have to figure out what is my max profit, what's my max, loss on the trade. So that's going to be my first step. And I also pay a lot of attention to the deviation levels. So you're going to see how that works out in our favor in this trade also. And so if I go in and I bought the lower one for 141.16, and the upper strike was 141.30, then 141.3 minus 141.16, that's 14 pips. And then I sell the upper one. Okay, so I sold the 141.30 to 142.30. I sold it for 141.64 with a floor of 141.3. So 34. So if I add 34 plus 14, I'm going to get 48 ticks. That basically means I can make 48 ticks max profit on this trade. Well, I can only lose on one side or the other. I can't lose on both sides, right? I can't be at 142 and at 140, like 1 or whatever, at expiration. It can't be at both. So it can only be on one side or the other. And the width from top to bottom on the upper one is 100 pips, and the width from the other one is 100. So there's a $100 max risk on either side, but there's a $48 profit. So what that means is I can only lose $52 on the trade on a $48 profit potential. Okay? And this is where I sold right here. Right there. I sold at this price here. Okay, we talked about selling right there at 141.64. Okay? But I bought on the other one at 141.16. Remember? And which 141.16 up to 141.30 is 14 pips. So I actually have 14 pips above that price. So 141.64 plus 14 is 141.78. So I actually, as of expiration, 141.78, I would be break even if the market, that's that 48 pips. Okay? I'd be break even if the market went up here to 141.78 and expired there. It did, but there was a way to even maximize that profit even more. And I'll talk about that here in a minute, right after we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're going over the iron condors from yesterday using Nadex spreads to trade the news. And as I was going through, I was really looking for straddles, but I started noticing over and over again all these pairs that were just not having the big move on the FOMC. And so we hopped in about 20 minutes till FOMC, 3 o'clock expirations, put on the trades. Single contract, you're looking at $48 prop potential, $52 risk. We can do 100 contracts, $4,800, $5,200, however you want to play it. And here's basically how the trade works out. All right, so the total risk, I said 52, and then you got the reward. And so I mapped it out. And basically, what will happen is if it stays in this little purple box, which is the prop, basically making the max profit on the long side, right above where I sold the one. So think about it this way: if I make $20 on the one I bought, I could lose $20 on the one I sold, and I'd be break even. Right? If I make $20 on the one I bought, I could lose $20 on the one I sold, and I'd be break even. If I make $20 on the one I sold, and I lose $20 on the one I bought, I could be break even. So at what price am I break even? Because they have capped risk, okay, capped profit. And so basically I just added the profit from the one I bought to the price of the one I sold, and that's my break-even point on the one I sold. I added the profit from the one I sold, and I subtracted that number from the price that I bought, the lower box spread, and that's my break-even on the one I bought. And so put that together, that puts me at, that's my break-even zone, okay? Meaning as long as, every tick I'm below this break-even zone, I lose $1, up to $52. Okay? Every tick I'm above this break-even zone, I can lose $1 up to $52. All right? Now, every tick I'm above this line, so above this line, I can lose $1. Every tick I'm below this line, I can lose $1 as of expiration. But every tick I'm above this line and below this line, I can make $1 as of expiration, with the max profit being right in the center there of $48. Okay? So understanding that concept will help you a lot on the trade, because now you realize this isn't near as risky as it looks like it is. Whereas doing a straddle, I would be break even here, and I'd basically have to get all the way up here to get a 1-to-1. I have to get a lot further move. Okay? So I'm really requiring a much larger move, like a 100-pip move, which usually doesn't happen at all on Euro Yen on the Fed funds announcement. I need about a 100-pip move to get a 1-to-1. Okay? This I'd need no move to get a 1-to-1. But reality is it'll probably, finish maybe 10, 20 ticks above, 10, 20 ticks below. And so that's really what I'm looking at. My 1-to-1, even though I can make 50, lose 50, I'm really looking to make or lose about $25. And I really don't expect to lose 25, because that means the thing would have to move up like 75 pips, which it just usually does not do at all. And even if it moved up that, I can still wait and let it come back down, because I still have a cap on my risk. Okay? And so anyway, so it goes up. When it flies up, remember this box right here, this green one right here, it hits max profit at this point. So when the market flies up, hey, let's take profit on this one now. We take profit on it. It's at max profit. We only have like a few dollars left. Why hold it? Because the market can come back down. It does come back down, and then you can choose to actually bell on the trade. Okay? We bell on the trade, lock in a nice, we got, not only to get the max profit here, we actually, I think it was like 0 or maybe a $5 loss on the one we were in originally, that we sold over here, just with all the volatility built in. Hop in, you're out. You actually could have taken off about a $5 to $10 profit. And if you got like $5 of like the $35 here, but you got the full 20 here, you got about $25 on the trade. Awesome. If you held it, you made about like $3 or $4 on the trade by the end. All right? But basically, it ran up. I'm like, why hold on? What if it comes back down here? Then I can close out the other side. So why not take off when I'm near max profit? Same thing over on pound yen. Let's look at that. With that one up. And we'll scroll on back to yesterday's Fed funds release. Okay, so here we are. We had the exact same thing happen. We're able to go in. It's right before it. So I'll walk through the strikes on that, and then we'll talk about how you could also done the pound dollar straddle. That worked out well. And we'll go back and we'll check out one more thing, which is we'll look at today. So on the retail sales. All right, stay there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so now I'll go through looking at pound yen, checking out yesterday's move right there, right on the Fed funds announcement, seeing, again, what we can do to, learn from that. I walked through it yesterday. You can watch the show, but I didn't really walk through it. I sprinted through it pretty fast. And so, like I said, I just want to take a minute to go back through it with you today, so that way you can sort of understand what was going on in case you haven't caught my previous shows where I've taught the iron condors, because we flew into that trade. And so on yesterday's, we were looking at the pound yen as well, and we bought the 169 to 170, and we sold the 169 to 170. We bought the 168 to 169. So there we go. All right. So sort of a very similar setup. We hopped in at, it's like, 140. So right here on the show yesterday. And 168 to 169. So we were right down here. Okay. And then, so that was the one we bought. So we'll go with some sort of green color around here. We'll pick one eventually. I'll try. This is the area light. There we go. Give me a green. Okay. And then we sold the one above it right up here. We sold this one. It was the 169 to 170 contract right there. And this is opposite of what you normally would think that you would do when you place these trades. Because normally you think you're going to go in and, like I said, you'll do the exact opposite. This is what would be more natural, I guess you could say. So if you sell that one and buy that box right there. And here, let me just get rid of the channels on here so we don't have too many boxes on the screen. There you go. All right, so on those boxes right there that we're actually buying and selling, and when I go in, I'm able to buy the lower one for, what do we have here? 168.79. So we got basically 21 pips of profit on the lower one potential. Okay, and what that is, I'm taking the ceiling of 169 minus the price I bought, 168.79. So 169 is the ceiling of the box, at the top of the box there, and then I bought it for 168.79, 21 pips, and then I go for the other one, and we were able to get that one, and we were able to sell it at 169.33. So 169.33 minus 169.33. So 33 plus 21. We got 54 pips. Now these boxes are $1 wide, so that means I have a $46 risk on a $54 profit potential. Not too shabby. Okay, so good risk reward on a single iron condor there. And again, same thing on this one. And then the market ran up. Your lower one is at max profit. Okay, take it off about $20, $18, $20 profit per contract. All right, take it off. Done. And then what happens? The market pulls on back down. And this usually, in my, is probably one of the best ways to do these. It's like you're really just trying to get profit on one side or the other. Okay, because really I'm going for about a $20 profit on this trade. All right, so $25. $54 is my max profit. I'm really going for about 25 because I also expect my max loss to probably be about 25. Even though I could lose 48 or 46, I probably expect maybe $20 loss, but it'd require a 70 pip move. So I really don't expect that to happen. When it flies back down, I get out of the trade for maybe a $10, $5 loss. Whatever. If I can make about 15, 20 bucks on one side, I can lose maybe $5 there. I can get about $10, $20. That's not a bad trade. I can probably actually get better than that. As long as I'm paying attention, I can probably get out at break even on one side and make my max profit on the other. If I pull that off, okay, then I'm out of the trade. I'm done. I have no risk and money's in my pocket. And I'm just using it normally doesn't move that much. If we look at, what's 54 pips above here, obviously what 54 pips above 169 is 169.54. So this one would have expired, which would also, by the way, be our break-even line. Pardon me. If you would have just held the trade and done nothing, you probably would have lost about $10 on a $54 profit potential trade. If you would have taken it off when it flew up, it flew back down, and seeing what's going on, looking at volume, there's a lot of little things you can do on that to time that, then you probably could have captured about $20, $30 on the trade. So either way, good trade, worked out well, really stayed within our expectations. We were not looking for a massive move. The other trade we can check out is the pound dollar. Now that one we were expecting a big move on. Okay, we were going for like an 80 pip move on this thing, and so let's check out the pound. Let's see what happened. What did it do? Did it move that 80 pips that we were expecting? And let's measure it out. So one of the things I forgot to mention, I was going to go over, but watching those deviation lines is huge because you can really see where it'll hit them and stop. It'll just chill out. And a lot of times that's where I'll also look to take profits. Okay? So always be watching those for your take profit points. But if we go in, and what do we get from just a high to a low point over here of post-release? And we're pretty much right to here, our low. We got 142 pips. It was a stellar big move, and we were calling for a big move. And then if we go back here to 3 o'clock, we'll just do because that's where the FX closes on the straddle we were looking at. It's still 122 pips. And notice it went right down to the 1 deviation, and what did it do? It bounced right off of it. Okay, the move was done. If you hadn't taken profit, if you were still in, if you're using a 4 or 5 o'clock, I think the 4 o'clock's actually disappeared because it blew past them. If you're using a 5 o'clock, then that definitely been the time to hop out of the trade. Trailing that stop down. But perfect move, big move. I said, hey, Yellen's coming out. It's our big press conference. We got QE on the table. We have Russia going on. We got unemployment. We got interest rates being talked about. It's not just the rate. It's also the economic. It's not just the Fed funds rate. It's also the economic projections report and the press conference. So when you combine all of that together, okay, we were looking for a big move on pound dollar. But even with all that together, historically, we haven't seen big moves on pound yen and euro yen. They're not dollar-based. And so that's why I went neutral on those pairs, but I did a straddle on the pound dollar pair, just because it was dollar. And out of all the pairs, it usually has the biggest move. And so that was the reason we did that trade that way. And what trade did we do? We went in, and we did a straddle on the pound dollar. So instead of where earlier we were buying the lower and selling the upper, we bought the upper and we sold the lower. And so as far as the lower goes, let's see here. We sold the 166.40 down to 163.40. So there was an insane amount of prop potential I did not expect at all, okay, to max this thing out. That's one of the things that sort of cracks me up. People go, oh, man, but your profit's capped on these spreads. I'm like, yeah, well, tell me how many days in and out of a trade you're capturing 300 pips, and then we'll talk about worrying about max profits. And by the way, there'll be a new spread, so don't, again, still don't worry about it. But when that becomes a problem, I think you don't have a problem, okay? Whatever the scenario is. And anyway, so we sold that spread right there. And we go over here, and we'll, I guess that'll work. And then we bought the spread right above it. Okay. We can make that one green to signify we bought it. All right. So we have a massive 700-point range here. And actually, I think I chose the daily, the ones that started at 7 a.m. went to 3 p.m. on the pound dollar because they're wider. Okay, and I chose the intraday, the shorter ones, the 2-hour ones on the euro, yen, and pound because they were narrower. I wanted that narrower spread on my iron condors. I wanted that wider spread on my straddles because the narrower spread on my iron condors limited my risk but didn't really impact my profit potential. The wider spread on my pound dollar increased my profit potential but did not really increase my risk. So it's really the best way to combine the best of both worlds. So we put that trade on, and we don't care which direction that it goes, just that it goes, and then it goes enough. And let's look at, sort of what was our risk on the trade, how much did we make, et cetera, okay? Well, on the long side, we look at the trade, and, there's multiple points. I took off half and then took off another half, but let's just say you held it, whatever. I took it off when it first did that 0.5 because it just hesitated for a long time. But I want to walk you through the entire thing because I wasn't there with you to walk through every piece of the trade, just the entries on it. And so 1.6671 minus 1.6640. Okay, so we got $31 of risk on the one that we bought. And then if we go over here, we got 1.6616 minus 1.6640. Okay, we got 24 pips. So we got 24 plus 31. Okay, we got $55 of risk on the trade. Okay, that's our max risk on the trade. We want to walk away ideally with $55 after everything's said and done. Okay, so what that would mean is I need to basically make 55 pips, ideally, plus 30 pips on the other side. Because remember, if it goes down, I need to expect I'm losing that $31 on the other side of the trade. Doesn't mean I'm always going to get 1-to-1. Okay, sometimes you can actually make more money by taking less than 1-to-1. Many times you can actually make more money by doing less than 1-to-1. So the averages of your probabilities and your combination of risk management is probability plus profitability. You know, it's funny. I'll hear some traders say, "Well, man, I just want somebody I just want a system that wins like 90% of the time." And I'm like, "No, you don't. I just want a system that makes 100 or 200% for every dollar at risk." No, you don't. Okay, you want a combination of the two. You need the right. If I win 70% of the time, but I lose $70 when I lose, and make $30 when I win, and break even. Okay? If I win 90% of the time, and I lose $1 when I lose, and if I lose 90% of the time, if I lose $1 when I lose, and I make $10 when I win, I'm up $1. If I win 90% of the time, and I make $1 when I win, but I lose $10 when I lose, I'm down $1. Okay? So you've got to combine probability and profitability, put those pieces together. And so we're trying to use the probabilities, not just of like how often we win or lose, but the probabilities of how much does this market move? How can we limit our risk with the Nadex spread? What is the probability it's actually going to move that far, like the one deviation level, things like that. Combining all those probabilities together, not just the how often do I win probability, but the probability of it actually happening right now. Anyway, so how far does it move? Well, we moved 122 pips. Okay? So, by expiration there. So, if it moved that far, that means, you made the 55, plus you made 31, plus you made a little more. Okay? So, if you put 55 up, you lost $31 on this side. So, if we go in and go, okay, well, if it moved 120 pips, let's make it simple. Moved 120 pips, lost, 35 pips, okay? That's an $85 profit is what it is. Except for the first 24 pips, you didn't make anything. What do you mean you didn't make anything? Well, because, remember, you sold at 24 pips lower than where the market was. So you made $61 on about a $55 profit. You made your 100%. So we had to have a big move to make that 100% move. All right? I didn't make the full 100% move. I took off profit a little bit earlier on half, and then it started popping back up and pulling back down, and I was like, I'm just out. I'm taking my money, and I'm running. Okay? But still, 10 contracts, you make $60 on it, you make $600. That's not bad for an hour and 20 minutes, right? And it's not just random. Like, I'm not doing straddles any time of day. You can see, like, straddles would not work real well during this hour or this hour. I did it right there, based specifically on news, and not just news, but news that has a history of moving a lot on that specific pair, on that specific announcement. And that you want to put all those pieces together. That specific pair, that specific announcement. Okay, so that really basically catches us up on the straddles and on the strangles from yesterday. The last piece I want to go into is just looking over here. And we'll look at today's, and then we'll talk about tomorrow, because we do have a trade on the list for tomorrow morning. All right, start there. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks. Let's go ahead and check out the Eurodollar report right here that just came out this morning. It wasn't really a Eurodollar report. It was the U.S. report that came out this morning. And talked about it yesterday about the existing home sales. And said, look at 8, maybe 9 o'clock for your entry, looking for an 11 o'clock expiration. Report comes out at 10. We don't usually see a lot of movement. We might see some up and down, but by the end, not a lot usually happening. Basically, we had 0 pips, okay, on the Eurodollar this morning. So you would have got max profit on that iron condor. There was a variety of them you could have hopped in on. That was the that one. We could look at the yen as well. Let's see here. We'll check that one out. And so on the yen, between 8 and flat, nothing. Max profit. Pound dollar. If you would have pulled that trade and done that one, usually has a little bit more on it. But Pound dollar, let's see, 8 to 11. Yep, well, let's see. Still got profit. There's maybe like 10 ticks in there. So not much at all. So right there to 11. There we go. Okay, 25 ticks. Okay, so let's say you brought in like 40 and made about $15 on pound dollar. If we go over, we look at dollar CAD or dollar franc, and then we'll look at dollar CAD because we're going to wrap up with dollar CAD. So dollar franc right there usually moves about high to low. We 55 pip range. So that should have some move. We didn't really get anything on the report this morning, which was good. And right there, not even 7 pips. So really close to max profit. If we go into dollar CAD, and like I said, we're going to wrap up on dollar CAD here. And looking at the 8 to 11, so we go in on this one. We move it on over to 11 o'clock. We had about 14 pips. So you probably would have made somewhere between $15 and $30, depending upon what the premium was at the time you got in for the 11 a.m. expiration spread there. Really, I guess you could have got it as early as 7. I put 8, but I guess you could have got it 7 because they open at 7. But anyways, just looking at all those different pieces, put them together. So what do we got? We got one more news trade left in the week, really. Beyond, I guess, we did have natural gas. I'll throw that on there. We'll look at it real quick before we move on to the final dollar CAD. But tomorrow we got the Canada core CPI and retail sales. Best choice, probably an iron condor, 11 a.m. Probably entered again around 8, just like today. Potentially at 10 o'clock. The one benefit of, at the 10 o'clock, because when it comes out, the one benefit is you can go in on these trades and you can take advantage of the lack of movement, especially on a Friday. So if it really is a small moving day, then we can go in there and take advantage of it. But at 50% or only 25% of the time does the dollar CAD break 50 pips when these announcements come out. And so that obviously gives you a massive edge right there. Ideally, hopefully you get 35 to 40 bucks on the trade and be just a really good solid trade. I mean, now it could just blow up out of the water. That's the advantage of like a 9 or 10 a.m. Expiration one there after the news comes out, because the spread will be narrower. So therefore, there's less risk in case it does just explode. Okay, and then on natural gas, we can see the big move right there. Drops down. Really doesn't do anything that's not expected at this time of the week. So pretty normal, even looking at the volume and everything. Just pretty much right on par. But anyway, I want you to definitely see that and be ready for that dollar CAD trade tomorrow. It's another great iron condor opportunity for you. I hope y'all have a great day, and I'll see you tomorrow. We'll talk about next week. Get ready for it. Stay tuned. We have another great show coming up for you after this. Bye.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.